Bitcoin has hit a brand new all-time high at 124K, but recent surging PPI inflation data triggered a sudden wave of panic selling, leaving many investors uneasy. So, what does this pullback really mean? Is it a sign of a deep correction ahead? Or just a brief dip before an even bigger rally? And most importantly, has the train already left? In today's video, I'll break down every angle you're wondering about and deliver a next level Bitcoin market analysis. So pay close attention. What's good, y'all? It's JC here. So PPI inflation report came in way above expectations. The market went into instant panic mode. I was watching the move unfold live and it was chaos. And now after thinking things through, I've put together today's analysis for you. We're talking Bitcoin today, so let's revisit my last Bitcoin video first. And when I last posted, Bitcoin just made a new all-time high at 123K and pulled back around 9 to 10% and was sitting around 114K. Naturally, this 10% drop sent fear through the market, but still, I said back then, based on my analysis of market makers and retail psychology, it was not the time to sell. And to be more exact, I pointed out that the shorts had not been liquidated yet, and that the 116 to 119K area was where most of their stop losses sat. And I said price would likely bounce at least to that level, and triggering a short squeeze that could push back to the previous high at 123K was still possible. That's actually exactly what happened. I personally closed my long position, entered at 113K when price broke 119. And yeah, by the way, after taking profit at 119, even as price kept climbing and hit a new all-time high, I didn't chase it. I said I was still waiting for the next prime entry zone, the best entry point again, and I said knowing when to sit back and wait for a great setup is a skill in itself. That's why I can stay calm and wait for my spot even in this drop. And honestly, if I had chased and forced an entry, I'd probably be panic selling like everyone else right now as well. So yeah, when I don't have the time to make a full video but have something important to say, I'll post it here on the YouTube community post. So turn on that notifications and don't miss it. And yeah, things were looking pretty good until yesterday's shocking PPI data sparked panic selling. And now here's the big question on everyone's mind. So with inflation jumping this much and uncertainty in the air, is Bitcoin still fine? Or are we facing a larger correction? And in this video, I'll break it all down with macro, charts, and psychology so you'll know exactly where we stand. But first, if you haven't already, hit the like and subscribe button. You're about to see analysis on a different level. Okay, let's start with the macro picture. Hotter PPI data shows that the tariff-driven inflation effect is now kicking in. Now, this data raises two key questions. One, will the PCE reading at the end of this month also spike like PPI? And if it does, how will it affect rate cut expectations? First, we have to remember that the Fed view PCE as the primary inflation gauge. So one positive takeaway is that in this PPI report, the medical services component, which makes up 20% of the PCE, actually declined. And also similar to the CPI, airfare prices rose, but this is often seasonal and temporary. But still, if PCE comes in hot, the current 90% probability of a rate cut will drop significantly. And if that happens, Bitcoin would almost certainly see price pressure. And if that happens, that could become the last great entry before the rate cut actually hits in September. And I'll share the exact entry levels and stop loss targets later, so stay tuned. Now let's take a look at the Bitcoin spot ETF flows. On August 14th, Fidelity, Bitwise, and ARK Investment saw small outflows. But BlackRock alone bought $523 million worth of Bitcoin ETFs. And also in Ethereum spot ETFs, BlackRock bought $519 million and Fidelity bought $56.9 million, which adds up to a total of $639 million in net inflows. And we should not overlook this. Institutions and corporations are still hungry, and it's important to see if their buying momentum actually continues. Also, the global M2, one of the most important macro liquidity measures, kept climbing and has just made a new all-time high. So from a macro perspective, I don't see a major red flag yet. Let's talk charts. Remember this channel I showed in my last Bitcoin video? We had two swings inside it, then a fake out and a clean re-entry. And as long as the price reclaims this channel and stays inside, I said that the price would likely push to the top of the channel. That's exactly what happened. We hit the channel top, and then after it broke out, now we're retesting this breakout zone. The best spot right now comes from two Fibonacci retracement. One from the 98K low, US-Iran conflict in June, to the recent 124K high. The 0.382 retrace is at 114.4. And two from the 74K low, the Trump tariff panic in April, to the recent 124K high, the 0.236 retracement at 112.7. And that places the ideal entry zone between 114 to 112, with 113.5 also lining up with my custom channel touch point. Stop loss would be 110.4, the point where the major demand zone fully breaks, moving from an undershoot to an expected breakdown level. And another angle from a technical perspective, if you draw a trend line from the 74K low, you can still see the uptrend is intact. And my swing long approach is to scoop up entries when this trend line temporarily breaks on panic selling. And my stop loss comes into play if a double top forms within the trend and price rolls over and the neckline breaks here. And if price doesn't pull back and keeps climbing, there's actually a key trend line I'm watching on the weekly chart connecting the 2017 high to the 2021 high. And it's actually a very significant trend line I'm watching, so I want you guys to draw it on your own chart as well and watch it closely. And looking at this trend line in November 2021, the market topped just 5 to 6% below this line, entering a bear market. And earlier this year, price got within 5 to 6% again before a 30% correction. Now we're right back at it, testing for a breakout. So if price doesn't give us the lower entries and just runs higher, my next long entry would be after confirming a breakout of this trend line, at least on the daily chart, followed by a retest as support. A breakout on the weekly close would be even stronger signal. I mean, it's hard to say exactly where that entry would be, but based on the slope, I can assume that it would be around 124, 125. But understand that this is not just any random trend line. It's an 8-year trend line going back to 2017. And if Bitcoin breaks through it decisively, we're going to see something really interesting because we're entering territory we've never even seen before. There were two attempts to break out this trend line, and on the next breakout attempt, Bitcoin could push through in one decisive move, or it might take another try to break this trend line. But if the third attempt fails, the fourth one will be even more likely to succeed. The reason, as I've explained in many of my past videos, is simple. It's all about exploiting short seller psychology. So market makers love baiting shorts in the same spot until they are sure they can crush them, because they let traders think it's an unbeatable short zone, then rip through it, triggering a massive short squeeze. That's why I'm not shorting here. And to wrap up today's video, macro still fine. PPI spiked, but rate cut odds are still 90%. The real inflation print is to watch the PCE at the end of the month. And also the spot ETF inflow trend hasn't turned down yet, so it's something we need to keep watching closely. And lastly, global M2 just hit a fresh new all-time high. And two chart-wise using Fibonacci retracements from 98K low to the 124K high, the 0.382 retrace is at 114.4. Also from the 74K low to 124K high, the 0.236 retrace is at 112.6. And the stop loss would be around 110.4, right where price would break below the undershoot zone into the expected zone. And also where a double top in the uptrend would break its neckline. And if there's no pullback and price keeps climbing up, watch this 8-year trend line from the 2017 and 2021 highs. If it breaks through this trend line and confirms, the retest zone of this trend line would make a solid entry point. And once Bitcoin breaks through here decisively, it's a completely new world, new territory. We're going to see something we've never seen before. And one last note. I mostly show my leveraged swing trades here, but I also hold spot Bitcoin. And in fact, my spot position is larger than my futures. So I use leverage to grow my capital, then accumulate more spot Bitcoin. I'm saying this because I don't oversize my futures positions no matter how well things are going. Because the first and the second rules of trading are both risk management. And I personally trade on BitGet and Bybit. Reason 1, both are major reliable exchanges. And 2 is the great fee discounts I get with them. Bybit offers 20% futures fee cashback, but BitGet offers 50% fee discounts on both spot and futures trading. So I used to trade mostly on Bybit, but lately I've been using BitGet more. It's mainly because it's better fee discounts. And if you trade seriously, I'm sure you know that 0.x% of fee is not small as your account grows. And I think there's nothing more wasteful than unnecessarily paying the full trading fees to the exchanges. So use the link in my pinned comment to sign up with my code, or just simply use the code JC777. Get those discounts, save up on fees, and start trading smarter. And if you found this video valuable, again, hit that like and subscribe. I'll see you in the next one.